Hi there everyone, this is Steve Miley for FX Explained, and in today's video interview we're going to be talking to Jim Martens of Elliott Wave International. Now Jim is a senior currency strategist around there, and he edits the Trader Focus Currency Pro service. Jim has been in the markets in here for a number of decades. I'm not going to say how many decades there, Jim, but let's just leave it as a number of decades. Starting off his career in the commodity exchanges in New York, where he earned a reputation as an insightful market analyst, and then went on to join Robert Prechter's team in here at EWI back in September 1993. He had a small segue out to Nexus Capital Limited for a couple of years, working as a hedge fund technical market strategist, and then rejoined Elliott Wave International in the summer of 2004 and headed up the currency team there. He's extremely experienced Elliott Wave in structure with his daily analysis, and we're really pleased to have him on today. So welcome to you, Jim.
Thank you, Steve. It's a pleasure to be here.
Thank you very much for coming on. So what we're going to talk today is really pretty much looking at your views in here going into the first quarter, maybe even out into the second quarter of 2021 in here for the major currency pairs. And we're going to try and look at as many as we can in here. We're going to kick off with the euro versus the dollar. So do you want to talk us through the chart you have here?
Certainly, Steve. You can see we're looking at a daily chart. Now you'll notice there's numbers and letters on it, and that's because I come from a background of the Elliott Wave principle. And you know what I like about it, why I've used it for decades now, is because what I'm doing is tracking a set of predefined and repeating patterns. And we see these on all different time frames: daily chart, weekly chart, right down to 15-minute chart if you want to go that far with it. And they each send a message, and they all build to help me count. What you see here is a completed, I believe, 5-wave rally in euro dollar from the low registered last March. Okay. So that signals the end of this rally sequence. So for the first quarter, maybe even into the second, I anticipate we're going to see a correction of that rally, possibly more, but I try to take things a day at a time, week at a time, and so on. Sure. But right now, the perspective of a 5-wave rally complete suggests at least a correction. And the first place I'm going to look for support is down in the area of the fourth wave of one lesser degree. That's that circle green 4 you see on the chart down, yep. And it terminates around 116. And yep. As it gets going, most of your viewers are probably familiar with Fibonacci retracements, and I'll calculate those as well because they dovetail with the wave principle very nicely. Sure. So we'll calculate the 38.2%, which is probably going to, just a ballpark, is going to fall in that fourth wave of one lesser degree. And you can see on the chart I have the 61.8% retracement already posted there. So what I'll be watching is the structure of that decline if it occurs, as I suspect it will.
Okay, so we're looking for like a breakdown through this current support you've got there at 120.59, and then that kind of target area. You say you're marrying up the Fibonacci retracement there with that labeled Y, the number 415 IV, excuse me. You're seeing that 116.03. So into that area, and there's that kind of your minimal target with the 61.8%. Then there's like an overshoot target.
Well, I look at one first and then the other, and when I mentioned the wave principle and different degrees of trend, what I'll look at the structure of the decline as it gets underway. So if I see at smaller degree, meaning a lower time frame, a 5-wave decline close to 116, I'll know that that's just the first wave of a larger structure, because even a correction should unfold in 3 waves, which contrasts with the 5 waves you see on that chart from that low on the left up to the high on the right.
So just for our readership and our viewers in here today, Elliott Waves, all those counts are in 5s and 3s, right?
That is correct. We try to keep it simple.
Exactly. And then we're hopefully going to do some more of these videos and hopefully do some educational side stuff on that, or if not, certainly some articles where hopefully you guys can help our readers to kind of have a better understanding of how the whole wave principle operates and how they can use it in their own analysis and their own trading.
We'd love to. I've spent 30 years, Steve, using the wave principle almost completely, never moving on to another methodology. So I've spent that time trying to educate everyone I know about the methodology.
Excellent, excellent. So I'm going to ask you now to have a quick look at the daily dollar index, the DXY, which is kind of, an upside down version of the euro versus the dollar. We've been speaking about that previously. So talk me through that. You're seeing the same kind of signals in here from the dollar index as you are on the euro chart?
Exactly the same, and that's little surprise given that the euro accounts for about 57% of the dollar index. They tend to mirror one another, though I will say there have been times in the past that they'll both show either a corrective or an impulsive movement, but follow kind of a different pattern, sub pattern, I should say. Right. And those are interesting times. But usually it'll show, as you see here, the daily chart of the dollar index from March shows a 5-wave decline, just like the euro advance. So we're looking for the exact same thing. What I'm doing right now with my readers is trying to confirm the end of that movement. And you'll notice on the euro chart as well as this one, there's the market in this one has moved off its low. I'm trying to find at small degree down to say an hourly chart, a 5-wave rally followed by a 3-wave setback to confirm the turn. But I'll also look at things like that channel line. If we can move above that upper channel, that's another hint that the turn is underway. The targets are the same, that green circle wave for Fibonacci retracement levels as well. And I'll say again, those are our initial objectives.
Sure. And just while you're talking about, it's interesting there, you got the channel, and I know as we go on to some of these other charts we're going to look at today, you have various other, what I would class as a technical analysis, chart patterns, which you're still interpreting, but just in a slightly different way, right?
Right. Now, I'll use the same tools. A general technician would probably use the Elliott as my overlay. But sure. The wave principle helps me to use those tools sometimes a little bit differently. It tells me, like in this case, you'll see that the channel connects the end of wave 2, the end of wave 4, with a parallel line off the end of wave 3. So the wave principle dictates to me the starting and ending points of single movements within the market. So I'll see all the time when I'm watching the financial press, the technician might be on TV and they'll talk about a Fibonacci retracement, for example, and they'll just do that measurement from the low to the high. And in my mind, I'm thinking, well, that rally's not complete yet. So you're using the wrong starting and ending points. It's 1, 2, 3 on its way to 5. So you need to use the starting point of wave 3 and the ending point of wave 3, not the absolute low to the absolute high. And I think that's a nuance that knowledge of the wave principle adds, and I think it's an important nuance.
Yep. Agreed. Yeah, it's interesting stuff, and I'm sure we are gonna want to learn more about that. I'm going to move you on now to the pound, if you don't mind. We have a lot of our readers in here and our viewers from the UK, so they're interested in what cable's doing, pound dollar, and we've got both. You're going to show us in here both a daily chart and an intraday, 4-hour chart, right?
That's correct, because I think sterling falls into the same category as I'm showing generally for the dollar, that I think there's a turn in favor of the US dollar underway, but there's more to the story when it comes to cable. It's the story starts just like in euro dollar. You see the 5-wave rally from March until the recent high or into current levels. I can't say that the top is in place just yet, as I might think it is in euro dollar. But you'll notice from that wave 4 up into the final high, or the highs being traded now, you can see I'm also counting 5 waves within the 5th wave. And again, that's what I was talking about, degrees of trend, different time frames. And even from that circle wave 4, so wave 4 of 5, you notice I have the converging trend lines. And the technician might say, well, that's a rising wedge and a sign of underlying weakness. I take that the same way. But if we look at that underlying chart, the 4-hour chart, you'll see that I have numbers there as well, 1 through 5. We call that an ending diagonal.
Right.
So you can see now the story is building on itself. 5 waves from March coming to an end. 5 waves within the 5th coming to an end. The 5th wave of the 5th is taking this terminal pattern, this wedge or ending diagonal, sign of underlying weakness in the market. So from an Elliott Wave perspective, by analyzing different degrees of trend, I can build that story from big overview down to lower degree and say, boy, this is really mature. This is really coming to a conclusion. and that turn is probably imminent.
Sure.
And I'll just add, in a pattern like this, the turn is usually pretty abrupt when it occurs, and the first move usually is swiftly back to the origin of that ending diagonal.
Right.
But at larger degree, we're expecting more to the downside as we are in euro dollar.
Okay, excellent. Thank you for that. So, and to finish off, looking at the European currency pairs in here, we've also got the dollar versus the Swiss franc.
We do, but Steve, before we move to that, let me show one more chart. It's back to the daily chart of cable, but you'll notice I've added an indicator to the bottom. Now, I consider myself pretty much a purist when it comes to the wave principle.
Right.
That's what I've used for more than 30 years. But there's basically one tool that I will use consistently, and that is momentum. I tend to use RSI. I think you could probably use any of the indicators you're comfortable with. It's just a 14 period because that was the default on my machine. There's nothing special about it. But I'm just looking for the divergence this daily chart shows. You see the rising prices still in that fifth wave compared to wave 3. But notice how the momentum has slowed, and it never reaches the level we saw during wave 3. Because in the wave principle, typically the third wave is the strongest of the subwaves, 1, 3, and 5.
Right.
And that's where I expect to see momentum peak. And then the divergence is just more evidence to me that this is indeed a fifth wave underway, and that means that movement is coming to an end. So again, I just want to say that to add another layer to the story that we build before we just make a forecast that a market a market movement is at an end.
Sure. And it's something that, obviously as a regular technician, as it were, we're watching the that divergence as well. And it's a matter of then just the thing is, as that divergence go on for a pretty long time until you get the actual signal from the actual price action. That's when that the divergence is relevant. But then obviously from your perspective, because you've got that divergence coming off that wave 3, then that's important, even more important, and more reinforces the view that this is all about to potentially come to an end, or likely to come to an end.
That's correct. And I point to the momentum last because the real story is based on the wave principle and that analysis. And then if I can throw something on there that's unrelated to it, that is pointing to the same conclusion, that just builds confidence in the outlook.
Sure. So let's take a look at those. Well, thank you for coming back to that. Much appreciated. But let's take a look at that Swiss franc then.
Right. So the Swiss franc is showing a similar pattern. It's a slightly different count off the high back in March. It's a correction, an AB. But then in wave C, and that's the wave C in parentheses, you can see a 5-wave decline. So there it is again. I just keep looking. That's what I love about the wave principle. I say it's simple. Many will say it's not, but to me it's simple in the way that it's always looking for the same predefined pattern. So here too, I can count 5 waves down, and that suggests the market should be at an end. In this case, notice the wave 4 is a sideways affair. And that's, technicians will call that a triangle. And what R.N. Elliott did is say, instead of just counting a sideways movement, he defined it a little bit. There has to be 5 sideways, 5 subwaves within that movement, A through E. And then he added this little tidbit. The thrust from a triangle is the final movement in the larger trend. And that's often helpful. So it doesn't mean the bottom's in, but it means this is probably the last move within that larger trend. So again, another indication that this decline is nearing an end. The dollar decline is nearing an end in general. So it's lasted quite a while. So certainly time to be looking for evidence that a bottom is in place. So I'm going to follow the trend for a great deal of these movements 1 through 5. But in that fifth wave, I know it's time to start looking over my shoulder a bit. I might not want to overstay my welcome.
Sure. And as now you've got that 90-minute chart as well on dollar Swiss, kind of showing this big resistance zone that the market's trying to break up through.
That's correct. But the real story here is the rally off the low. Now, this is a 90-minute chart. And notice I'm counting 1 through 5. So on those daily charts, I'm counting 1 through 5. And here I go again, doing the same thing at this lower time frame. Again, degrees of trend. So this is the beginning of the building the story that the bottom is actually. And what I like to see because I like the market. A colleague of mine, Jeffrey Kennedy, always says that I like to see the market commit to me before I commit to the market. And everyone has their own style of trading, but this makes sense to me. I'll give up a little bit at the beginning to have some confidence that the low is actually in place instead of guessing at that low. So in this case, we have that 5-wave rally. That's the first bit of evidence to suggest that that prior decline is complete. And if we see a 3-wave setback, a corrective setback off the end of that rally, that completes the reversal and presents me with an opportunity, because I know where I'm wrong. Again, most importantly, where am I wrong? In this case, it would be the origin of the 5-wave rally.
Sure. Yeah, and it's always important that, you know, any kind of strategy that you use, any kind of analysis that you do use, that you as you say, I mean, the great thing, you know, whatever kind of market chartist, whatever kind of chartist you are or technician you are, and whatever you're following, we know when we're wrong, right? This has always been my kind of what I've aimed back to our fundamental macroeconomic brethren, is that I always said, you know, I know when I'm wrong. You know, it's not wishy-washy. If it trades below that number, that price, I'm wrong. If it trades above that price, I'm wrong. Where for them, it's like, well, the ECB are a little less dovish, or the Fed are a little more hawkish. Well, how hawkish do they need to be, or dovish do they need to be for you to change your view on interest rates or the dollar, whatever it is? So, you know, that's a great thing that we have, that, you know, technical analysts and the technical analysts, we have very much a defined system to actually trade from, rather than it being, I don't want to say wishy-washy, but I've already said it when it comes to macroeconomics.
Mm-hmm. And what's important too is, it's happened to me many times. It happens to everyone. I may think a turn has occurred, like I'm thinking is underway here, and the market drops through that low, in this case at 87.58. It proves me wrong, and that just tells me at this degree of trend, at the entry point, at making the call that the bottom's in, I'm wrong there. But it doesn't necessarily change that bigger picture, that in this case we'd revert back to that larger declines underway. But it's still mature. It's coming to an end. I'm still going to spend most of my time watching the market to see if I see this pattern once again. So instead of making some grand call with no idea, I say what a fundamental analyst really doesn't have a line in the sand to gauge. They just have to say, well, I'm bearish until the news changes. Well, I just found that doesn't really work for me. I need that level in mind. And if I'm proven wrong, and I see this reversal again, I'm willing to jump back in again, or at least look at that as an opportunity. Now, I could add more criteria to prove the trend has turned, and the wave principle helps me with that as well. So I tend to say, I often dip my toe in the water. I'll see what I consider a reversal pattern, and I may get involved in the market. But then the market progresses, and if it's doing what I think it should be doing, then I'm in waist deep. And I can add to and as confidence grows. Sure.
I'm going to ask you to move across to Asia and take a look at dollar yen, if you don't mind. And I see we've got 3 charts here. We've got weekly, daily, and we've got intraday as well.
We do. And let me start with the daily chart. And what's interesting on this one is you'll see dollar yen too declining. That is a US dollar decline from last March till recently. But it's a completely different pattern. Before you were seeing 1 through 5, the third, it's easy to spot the trend when in the case of euro dollar, when it was moving higher, it's bar after bar higher and higher. And when there's a correction underway, it's kind of muddled. Well, this chart, that whole decline looks muddled, doesn't it? And to me, that says, well, the whole thing then is a correction. So we have 2 pairs that are showing the same thing, dollar weakness over the same period of time, but in a completely different fashion. Impulsive, trend defining in case of euro dollar, but in this case, corrective. And I'll just name, in this case, we call this pattern a triple zigzag, and it should be complete. And as we counted it all the way through as a correction, and we noted that as it approached 101.25, based on a larger pattern, a larger degree of trend, we expected that low to hold. And that takes me over to the weekly chart. And what I'm counting there is a triangle. And we mentioned that in dollar Swiss on the daily chart. Here it is on a weekly chart, maybe incomplete though. It's again those 5 subwaves. So going back prior to 2017, so I believe the high was probably in 2016, I'm counting A through E. And I'm well within the wave D movement, but I don't think it's complete. But anyway, by looking at the perspective of the weekly chart, it told me, well, if wave C ended at 101 and a quarter, even this pullback needs to end above that level. On the daily chart, I was counting that corrective slide. So again, multiple things telling me, hey, it's time for dollar yen to turn higher. And then I'm thinking too, I'm seeing similar patterns, or the patterns I'm seeing in the other pairs have the same implications. It's time for a turn. And that's where I start doing some cross-market or cross-pair analysis.
Yeah. Excellent. So finally, I guess, now I've got a couple of charts that I'm going to throw over to you, because it's just I'm conscious of time in here. We've got we could either look at the Australian dollar or Canadian dollar. So what do you think is more important to the overall outlook for markets in here and for the dollar?
I'll show the Aussie dollar, just because it shows something that a lot of people complain about the wave principle about. Right. So here's, I could show the daily chart. And again, from last March to present, we're looking at a 5-wave rally unfolding, potentially. And you can, if you look at the upper right-hand corner off the high, you can see it's kind of sideways meandering off the high. So I haven't been able to say that Aussie has topped just yet. So I'm still with the trend here. Market's above the lower channel line. Just no evidence that a downturn has occurred. Again, let the market commit to you before you commit to the market. Yeah. What's interesting on this chart, Steve, is along the bottom of the chart, you're going to see what we call, an Elliottician will call an alternate count. Sometimes we can look at the chart and, applying the rules and guidelines, come up with multiple ways to interpret the chart. Right. And along the bottom, you can see the green circles. Let's pay attention to those. A, B, C. This could be a 3-wave rally instead of a 5-wave rally. But what I wanted to say was, I always think I don't get caught up in the count so much. It's the implication of the count. If I count this as 5 waves coming to an end, well, a turn's coming up. The rally's mature. If I count it as a correction, A, B, C, I need to count 5 waves up from that low near 70 anyway, just like I do on the 5-wave count. Sure. And it suggests it's coming to an end. Yeah. And after the completion of an ABC would lead to a reversal as well. So I could count this 2 different ways potentially, but come to the same conclusion. And to me, that some people say that that's a hindrance. I look at that as a strength of the wave principle again, but I'm not caught up in the count so much as I am the implication of that count. Yeah. So whether it's 3 or 5 let me just make sure I understand this. So whether it's 3 or 5, it's turning anyway, right? It's going to turn at 3 or turn at 5 because that's what it tells you. And I guess then, depending if it's a turn at 3 or a turn at 5, then the degree of the correction. But what you do know is when it does turn and it starts to give you the confirmation, then you know that, well, one thing you don't want to be is long, and you're more inclined to be short, right? Whether, as you say, whether it's a turn at 3 or a turn at 5, it then depends on, after that you can recount to see whether the magnitude of maybe the move. But then, at least you're the right way. The first thing is important to be long or short, right? Then you decide how much you make out of it. That's correct. I just want to be on the right side of the market, and then I'm gonna, if it turns lower and I see 5 waves down on, say, an hourly chart, 3-wave rebound, then okay, we caught the top. Now we're bearish under both scenarios, and then we're going to see how these patterns build over time, coming weeks and coming months, to determine. I might not know, I hate to say it, but I might not know if this is a 5-wave rally done or a 3-wave rally done until well after the fact. But as long as I'm on the right side of the market, the wave principle has served me well. Yeah. Well, you know what? I think we've got just about time. If you want to go and do that dollar CAD anyway, why don't we do it? And then we'll wrap up from there. All right, let's move over there. I'll start. I have a daily chart here. Yeah. And again, I just start with it, and no surprise, you see that same pattern of 5-wave decline from March 2020 coming to an end, I think, here too. Unlike some of the others, I can't say a bottom might be in place. It's trading near its lows as we speak. But we're looking for that return to the area of the 4th wave. That's step 1, and then we'll take it from there based on how it gets there. But I also have a weekly chart here that I wanted to show, and it'll show what a technician will notice a double top back, I believe it was the high in 2016, and then again the high probably last year up above 145. I've talked about 5-wave movements. We've mentioned 3-wave corrective movements. Here you see 2 of them off the high on the left of the chart, labeled wave A, and then the rally from A to B is in 3 waves. The wave principle tells me that cuts down the number of patterns. A movement that starts 3-3 means it's either a triangle, and we've mentioned the implications of that, or it could be a flat. So I don't know which pattern is correct, but both of them tell me the same thing. And then, of course, the on a grand degree of scale, but the 5-wave rally or the 5-wave decline on the daily chart tells me, regardless of which of those patterns is unfolding, we should see a rally in dollar CAD or reversal in dollar CAD and a pretty good recovery at a minimum.
Sure. Excellent. Well, it's been absolute pleasure talking to you today. I've learned some stuff, even having been in these markets for over 30 years as a technical analyst for like 20 of those. I've learned stuff today, which is always something that I love to do, to educate myself. So thank you very much for that. And I kind of guess in summary, I'm not going to put words in your mouth, but I'm going to start by doing that, I'm afraid. So, effectively, we're looking for that dollar turn, right? Which, is kind of the conclusion that, I've come to during my own analysis as well. I guess my final question to you is going to be, and, you don't have to directly answer this maybe, but because it might not be fully evident yet. But, I often say, I teach as well. And I often say to students, just because a trend ends doesn't mean that a whole new trend begins. Consolidation is part of market activity and a large part of that. So what are your feelings of this turn from what we've discussed this on this interview? Do you think the turn means that we're going to see obviously potentially a stronger dollar from here, but is it a stronger dollar and a proper bull trend for the dollar, or did you think it more establishes a broader range and we're kind of we're going to be sideways in this kind of time frame that we're looking for at Q1 into Q2?
It's uncertain at this point, but I mentioned we looked at the weekly chart of dollar CAD, and I mentioned the triangle is one of the possibilities based on the back-to-back 3-wave movements that it shows, and that suggests this could be just part of a much larger sideways pattern. But that doesn't negate the idea that the upcoming dollar rally could be significant. And again, from an Elliott Wave perspective, we'll look at that and say, hey, when it gets to that 4th wave, did it unfold in 5 waves? Then it's just the first wave of a larger movement, or is it in 3 waves? That could be it. So we can't just walk away from it. We're always monitoring it. But the wave principle gives us a backdrop and that provides us with some expectations.
Excellent. Well, Jim, again, it's been a pleasure. Thank you very much for coming on and talking about your views on the various currency pairs, for educating myself and our viewers. And I really hope that we can do it again at some point.
I'd love to, Steve. I've enjoyed it. Thank you for the opportunity.
Thanks. Take care.